Good afternoon, and welcome to NCB Financial Group's third quarter 2020 investors briefing. I'm Dennis Cohen, Group Chief Financial Officer and Deputy CEO, and with me on the panel is our President and Group CEO, Mr. Patrick Hilton. I will take you to a short presentation, after which our President will share his perspectives, and a question and answer session will follow. The group recorded net income of $20.3 billion, with amounts attributable to shareholders of $14.8 billion, earnings per share of $6.19, and record net operating income of $81.6 billion, and return on equity of 13.2%. As we continue to navigate this challenging and uncertain environment, this quarter's resilience and scale of our business, as in spite of the unprecedented challenges, we have nonetheless been able to deliver significant net income to our shareholders. We have begun the process of streamlining the insurance business currently offered by our competing subsidiaries, NCB Insurance and Guardian Life Limited. And as part of this strategy, NCBIC has requested the FSC's approval to transfer 100% of its insurance and annuities business to Guardian Life. If successful, NCBIC will continue its business as a pension fund administrator and investment manager while selling insurance products as an exclusive agent of GLL. We believe this move will improve efficiency and leverage economies of scale. In light of the uncertainty and consistent with financial institutions globally, the Board of Directors at its meeting yesterday did not declare a dividend in the prevailing circumstances arising from the pandemic. Our profit attributable to shareholders of $14.8 billion represents a $6 billion decline from the prior year and has led to a decline in some of our key metrics, namely return on assets and return on equity, which are now 1.64 and 13.2, down from 2.2 and 20.7 respectively in the prior year. Although our operating revenues grew by 37%, a substantial contributor to this was the inclusion of 9 months of Guardian results compared to only 2 months in the prior year. The pandemic has tempered the year-over-year growth by reducing security trading activity and earnings on foreign currency and investment activities. It has also led to increased credit impairment provisions and lower fees and commissions. Operating expenses increased by 41%, also representing the inclusion of 9 months of Guardian's expenses, and our cost-income ratio increased to 68.3% from 67.1%. Examining some of the details of our financial performance, in comparing the year-over-year 9 months results, we should note that the prior year benefited from one-off gains of $3.3 billion related to the disposal of an associate and $2.3 billion from the revaluation of our investment in Guardian, with no comparable item in the current period. Without these extraordinary gains, the net profit attributable to shareholders would have represented only a 2% decrease from the prior year. Banking and investment activities improved by 12% or $6.2 billion to $58.3 billion, despite the reduction in gains from foreign currency and investment activities and the rise in our credit impairment losses. The net result from insurance activities improved by $16.1 billion, reflecting a full 9 months of Guardian results in the current year compared to only 2 months in the prior year. For the period, operating expenses increased by $17.4 billion or 41%, again, primarily due to the full 9 month results of Guardian's results. The material increase include staff costs, which totaled $29.9 billion, growing by 38% or $8.3 billion. Other operating costs, including depreciation charges, increased due to significant investments in improving our digital capabilities and implementing COVID-19 related initiatives and measures to ensure the safety of our staff and customers. In looking at our segment performance, our general insurance segment results improved by $5.5 billion from the consolidation of Guardian. Our payment service segment also recorded an increase of 2% or $45 million over the prior year due to growth in our credit card business. However, 5 of our 7 segments recorded decreased performance from the prior year. Due to the economic conditions and reduced securities trading activity, our wealth and treasury segments recorded reduced operating profits, down by $555 and $546 million, or 8% and 9% respectively. Our commercial and consumer segment recorded a decline of $356 million from the prior year. Credit impairment provisions, coupled with increased costs from investments in technology and real estate infrastructure, adversely impacted the results of this segment. Corporate banking also recorded a decline in performance, primarily stemming from credit impairment provisions. Our life and health insurance segment recorded a $174 million reduction from the prior year. While this segment has benefited from the consolidation with Guardian, it has been severely impacted by the fall-off in bond and equity prices since the onset of the pandemic. Nonetheless, its core insurance activities have been resilient. Examining the key components of our statement of financial position, I wish to note that our asset base sits at $1.7 trillion, an increase of $122 billion or 8% over the prior year. The growth in the asset base was primarily due to 8% and 9% growth in our loans and investment securities portfolios, respectively. Equities, or equity, increased to $151 billion, up $14 billion or 10% from the prior year. Our customer deposits increased by 7% or $37 billion and now sits at $546 billion, while policyholders' liabilities, our second largest funding source, increased by $8 billion or 2%. Also of note, all our regulated entities have met their applicable capital and liquidity regulatory requirements. Ladies and gentlemen, the pandemic has been ravaging all economies across the globe, and the 32.9% decline in the US GDP demonstrates the scale of its impact. Nonetheless, this has not frustrated our commitment to our strategic plans, but has certainly reinforced the importance of our focus and discipline to ensure our resilience during this crisis. It has also confirmed the wisdom in many of our initiatives and provided the opportunity for us to accelerate many, including our digital-first strategy. In closing, I wish to thank you all for your continued support, and I now hand over to our President, who will share his remarks. Thank you.
Thank you, Dennis. Let me join Dennis in welcoming everyone. A very good afternoon to you all participants, customers, shareholders, executives, management, and staff of the institution, members of the media, members of the analyst community. I want to thank you for joining our Q3 investor briefing. This is our second digital investor briefing since the start of the global pandemic, and I believe it is safe to say that we are firmly in a new normal. The last few months have been unprecedented in terms of the level of uncertainty and challenges that we have seen across the globe. But we have also seen many positive examples of change and transformation in spite of these uncertainties and in spite of these changes. We have seen where countries in which we operate, such as Jamaica, such as Trinidad, such as Cayman and Bermuda, have been proactive, creative, adaptive, and solutions-oriented in their national response to the COVID-19 pandemic, and as a consequence, have been able to keep the infection and mortality rates relatively low. The truth is that there is no business continuity plan or disaster plan that could have adequately prepared us for this pandemic. However, I think we have learned a lot about how one can navigate and remain resilient in the most challenging and uncertain circumstances. I want to share with you this afternoon a few of these lessons. Lesson number 1, be clear and resolute in the commitment to survive, but also importantly, to thrive. Our governments have been clear in their objectives of minimizing infections, hospitalizations, and deaths, and have responded accordingly. We as a business have been clear in prioritizing health and safety and working with our customers while scanning the environment and acting to capitalize on any opportunities presented. Lesson number 2, leverage global best practices and insights, but customize for your environment. At a national level, and as individuals, we have listened to the guidance of the World Health Organization and CDC, among many others, but we have also effectively customized solutions to fit our environment. Lesson number 3, constantly scan the environment for opportunities and act quickly to capitalize on these opportunities. We have seen companies adjust their business models to sell online, start up new delivery and sanitation companies, and adjust their operations to make and distribute masks and other medical equipment. It is indeed true that in every crisis, there are opportunities. Lesson number 4, never assume there are limitations in what you can achieve based on your geography or financial resources. We have seen varying levels of success across the globe in managing the impact of the pandemic, and this has not necessarily been correlated with national GDP. It is important that we note that the quality and magnitude of our outcomes do not have to be constrained by the perspective on what is possible for an emerging market nation or for the environment in which we operate. It is within this context that I discuss the way forward for the NCB Financial Group this afternoon, because we are living these lessons as we continue on the journey to our 2024 aspiration to become a world-class Caribbean financial ecosystem. This aspiration is anchored, I remind you, by 4 strategic pillars. 1, strong financial performance. 2, delighted customers. 3, inspired people and culture. And 4, digital to the core. I will briefly discuss the application of the 4 lessons I previously mentioned to us as an organization and even as individuals in the way forward. Lesson number 1, I remind you, be clear and resolute in the commitment to survive and thrive. Adopting a mindset and a commitment to thrive is a necessary first step to getting there. As the quote says, the man who thinks he can and the man who thinks he can't are both correct. Buddha put it beautifully and succinctly when he said, the mind is everything. What we think, we become. If we do not believe or commit to overcoming obstacles and succeeding, then that will be our outcome. The converse is also true. So notwithstanding the challenges brought on by this pandemic, our determination to achieve our aspiration is fixed. We have had to delay some initiatives, we have had to pivot, while in some areas we have been able to accelerate ahead of schedule. One example is in relation to our digital to the core targets. We have not changed our ambition, but we are evolving our ways of working, constantly scanning the environment and pivoting to capitalize on opportunities in order to ensure we will arrive at our destination and on time. Ladies and gentlemen, to put it succinctly, we are transforming at speed and also at scale. Lesson number 2, I remind you, leverage global best practices and but customize for your environment. Across the world, we are seeing organizations leverage digital technology to transform their businesses, and it is important that we do the same in the Caribbean. If we do not keep pace with the changes in the world, then we run the risk of becoming irrelevant or obsolete. For health and safety, using digital channels to manage our financial affairs, to run our businesses, and to educate our customers to access banking, insurance, and wealth services digitally. We also continue to build out our digital capabilities to expand the functionalities available for our customers, to enhance the experience of those customers, and most importantly, to ensure their safety and security on these platforms. Lesson number 3, I remind you, constantly scan the environment for opportunities and act quickly to capitalize on these opportunities. In Trinidad, through Guardian, we were able to launch COVID insurance for first responders in record time. NCB Insurance also launched a COVID-related insurance product. This met a market need and helped our customers. I often like to tell my colleagues the story of Bata Shoe Company. Other shoe companies went to Africa in the early days and concluded no opportunity as the people don't wear shoes. In Africa, Bata saw great opportunities and went on to establish and grow a business, while other international shoe manufacturers left because their perspective was no opportunity. They both saw the same thing, people with no shoes, but they saw 2 different outcomes. So, we at the NCB Financial Group remain opportunistic and are constantly scanning the environment so that we can respond to the opportunities that continue to arise even in the crisis. Lesson number 4, never assume limitations on what you're able to achieve based on your geography or financial resources. Our ambition, as we have stated over and over again, ladies and gentlemen, is to become world-class, because we believe this is our obligation to our customers and to our stakeholders. It is what they should expect, and it is what they deserve. We are not constrained. We are not constraining our ambitions to what people believe is possible for the Caribbean region. We look at best-in-class insurance companies, best-in-class banks around the world, but we also look at companies like Amazon, like Google, like Apple, and Microsoft, because we want to learn from the best to become the best for our employees, our customers, and our shareholders. In summary, these lessons we have been living by in response to this pandemic, but we will continue to learn and to adapt as things continue to evolve. In closing, I'd like to thank our team, our customers, our shareholders for your continued support and contributions to the success of the NCB Financial Group. I want to encourage us all to embrace the new normal, as painful and as challenging as it is, and to apply these same lessons to our own lives as we navigate a time of continued uncertainty. Please continue to be safe, and for the Jamaicans streaming live, have a happy Independence Day tomorrow. Thank you.
Taking questions.
Question for you.
Yes.
We have had a couple of persons asking about opportunities in Guyana and for an update on how NCB is now seeing those opportunities and planning to capitalize on them.
Sure. So we know that Guyana in recent times has been one of the fastest developing economies, largely driven by exploration and success that they have experienced in terms of oil exploration, the findings of Exxon, and who has been doing a lot of drilling there. And as a consequence, we would like to be able to participate in the development of that economy in some of the providing some of the financial solutions for the people of Guyana, for companies that are invested in Guyana, for companies that are interested in growing there. So we have been looking at a number of ways of accomplishing that. The primary institution through which we have been doing that through which we have that focus is NCB Capital Markets. and we are still in the early stages of fully developing, what the operating model and so on is going to look like. So suffice it to say that it is an initiative that we're pursuing, but I wouldn't be able to give any more details at this point in time because we have to go through a whole process of application and approval before we can begin operating there.
Thank you, Mr. Hilton. And for Mr. Cohen, what are management's current expectations in relation to credit performance during the course of the rest of the year, and for the market generally, and for NCB in particular?
Well, as one can imagine, I don't think anyone can seriously, with any level of accuracy, predict what is going to happen, certainly not safely. Certainly, we are in fact preparing for the worst, so to speak. And as a result, I think we have been fairly prudent in terms of our provisioning and also in terms of us making advances to work with our customers. The fact is that we operate in a number of jurisdictions, different markets, and different markets may also have different experiences. But certainly within our respective portfolios, we believe that we have actually made adequate provisions based on the trends we've actually seen, and we continue to monitor, and we will continue to work with our customers with a view to ensuring that we are actually ahead of the curve in terms of what's happening in terms of the overall credit position for our borrowers.
All right. Thank you, Mr. Cohen. And I think at this point, we're actually going to turn back over to you as those have exhausted the questions that we have this afternoon.
Oh, that's it? Okay. Well, I think Mr. Hilton's comments speaking to just our mindset and our attitude towards the pandemic, I think says it all. This has been our second virtual investors brief. Again, I'd like to thank all the persons who have taken the time to listen to our message. As I said, we continue to be very opportunistic, as Mr. Hilton says, and we expect a lot of positive things and also expect to face the challenges quite boldly. And at this stage, I wish to wish you all the best for the holidays and looking forward to sharing further success at our next investors brief, which will be sometime in November this year. Thank you all.